Hey there, randos. Random Dave here. So I'm going to be starting a new series, and the reason for this is my previous account is no mo. Yeah, I built that thing up, got around a little over break even, and collapsed it back down to nada, nothing. So that again precipitated another uh, period of introspection and searching for what went wrong and why and what can be done to address it and yeah, to fix the whole issue. So that led me to, some searching online, and I found Tom Hogard and his uh, book Best Loser Wins: Why Normal Thinking Never Wins the Trading Game. And kind of moved me into a different headspace. And so yeah, I began to think about all these trading truisms that I weren't, I wasn't, following rules and such. And that my history is that I think I'm able to be successful because my hit ratio is pretty good, but what I'm not doing is the risk management very well at all. And that's because there are rules involved, and as it is with a lot of folks, we don't want rules. We want to be able to do it our way. And, like I learned last year in the end of November, regarding my career, I learned that my way isn't the right way. And I need to follow the rules, and I need to follow people with more knowledge. And so, yeah, giving up that control, surrendering to it, really seemed to be the solution for me. Regarding my career, I ended up getting a wonderful new job that has a great pay. I got promoted in less than 6 months and got a 20% raise out of that. Of course, more responsibility, but it was like a rocket. Rocket from the crypt is really the way to describe it. I went from pretty much dead in the water to, in a really good place. And so I'm very thankful to God for that, because that wasn't me. But also, I'm thankful that I was able to surrender from my ways into doing it another way. And so that's what I'm looking at now with my trading. And so I'm looking to the experts, the people that are successful and know trading psychology and know what not to do. And so with Tom Hogard's book and YouTube channel, Trader Tom, I've learned a lot. And so a lot of it goes back to Mark Douglas, as you all know. Here is Mark Douglas's book, Trading in the Zone. Yeah, master the markets with confidence. Something, something, something. But yeah, it's really excellent book for trading psychology. And so what I'm going to do is what's called the exercise. The exercise is 20 to, for me, I picked 30 trades. I'm going to do 30 individual trades following a very precise as possible, precise trading method. And that is going back to my basic second entry long approach, where I look for those two-leg pullbacks or second attempts to do to go long, as long as it looks reasonable to do so. And by looks, meaning I'm not at risk of hitting a double top, And the converse is true, by the way, for these. These won't only be longs, they'll be shorts too, second entry shorts. This will also include failed second entry longs, where I will go short, and failed second entry shorts, where I will go long. I'll be using trend channels and trying to follow those trends. And I'll be using the 5-minute charts, and I'll be using the 20 EMA. And then I'll be looking for areas where I have good entries, and I just will take them regardless of, my feelings in the matter. So the idea is to take the trade with a 2-point stop and a 4-point profit target and just let it go. And I'm going to be using one MES contract. And so as you see, I'll be trading the futures and micro ES and spending about, I guess will be about $300 if I were to have all losers. That's 30 losers in a row, which seems highly unlikely. But that would be about $300 with fees on top of that. And so just a single contract, no adding, no subtracting, just to go through the motion of setting my, um, trading approach. This is my rule. This is what I'm going to do. And so just go ahead and do it. Adjusted my camera a little bit there, but yeah, so this is just designed to get me into a mode where I just follow the rule, one after another, keep trading. When the setups show up, I don't get a choice in the matter, I just do it. And the idea is to let it go and follow the plan. And also, it's a way of seeing my edge. I believe that this method has a genuine edge, and so in 30 trades I will know, you know, what is the outcome of letting probabilities guide. And so, excuse me, and so that's the gist of it is, getting comfortable with probabilities, knowing, as Mark Douglas says, anything can happen on a single trade, but after a number of trades, for example, 30 trades, now you're in the realm of probabilities. And so you have to trust that your edge and the numbers will work out and you will be profitable. That way you won't take risks of moving stops and adding to losers because you know in your gut that, hey, this one trade, anything can happen. I could win big, I could lose big. If I lose big, it's like game over. So that's not worth it. If this trade doesn't work out, it's just the one trade. I accept the risks and the costs involved in that, and I will move on to the next trade and let probabilities take care of it. And if my probabilities are correct and my edge is good and my profit targets are in the right place and my stop losses are in the right place, then I will come out ahead. And I'll just let time take it. Time and repetition and following the rules. And that is the key to success in this business. Grand slams occur for your average trader so rarely that it's not even worth thinking about it. So don't think about the grand slam. What I need to do is build up trading discipline and build up my trading capital, and then I can think about, going to the next step. And this is from Tom Hogarth's book, and that is something that he's also learned from Dr. David Paul, who is kind of a trading guru out of South Africa. He's no longer with us, but he was a mentor to Tom and taught him a lot of things. And Tom is a very successful trader. He's a Dane, and he's traded in England and in Denmark. So in reading his book, I was reacquainted with the exercise of doing these 20 to 30 trades. I picked 30, and watching the transformation as I go through that of fear-based trading to, less emotion and less concern for outcomes and more worry and concern and focus, really less worry, but focus and concern about the process. And so that's what this is supposed to teach, is having faith in the process of what you're doing and being consistent with that and not letting fear come into the mix, because that's what trading without stop losses can do, and moving stop losses and adding to losers. Those come out of fear of losing, fear of losing money. And so you have to get over that whole idea that you can control what the market is doing. The only real way I should be managing my trades going forward after this exercise is to add to winners, to get outsized gains. I don't want outsized losses. I want a fixed loss based on the trade. So that's the plan. And so what I'm doing is making this new series. I signed up for an account on a firm called Trade Day, and I'll bring that up here. All right, I'm back to Mini Dave here. And so here is Trade Day, and you have they have a sale, I think, going on, something like 50% off. But 10K evaluation is what I'll be doing. Profit target 1,000. End of day trailing maximum drawdown 1,000. 1 mini or 10 micros. I'll be doing micros, and you have to trade for 10 days. So that's what I picked. And so we'll be doing this through this very inexpensive trade day evaluation and see how it goes. We're going to play the edge. We're going to play the set it and forget it game to build some discipline and trust myself and trust my edge and let probabilities do their job, and really try to internalize the idea that anything can happen on a single trade, but over time probabilities win. And if I truly have edge, like I believe I do, then I will see that in this account. So yeah, I am really excited to go on this journey, and I hope you're excited to join me. And right now we're day one, I guess you could call it. So I'll be putting in some video footage of Mark Douglas and Dr. Paul talking about this exercise. And so if the quality of those videos isn't that great, I apologize, but especially with Mark Douglas, that video is old. It's an old video. And well, now that I think about it, it's really unfortunate, but both Mark Douglas and David Paul are no longer with us. A couple of real gurus in the area of trading and trading psychology. And so now we, or at least I do, I look to Tom Hogarth, and he was a protege, I guess, a student, a follower of David Paul, and so I guess I'm looking to him to carry on the work and lead by example of how to become profitable, how to think like the 10% or the 1% that do succeed in the trading world, in this business. As they're fond of saying, it is a business, and treat it as such. So that's what I'm trying to do here, is lay the groundwork and create something bigger.
I've answered this question, folks. Can discipline be built, or has one person got it and another person hasn't got it? And I believe it can be built, and can be built relatively easily. Here's what Mark suggested. You need to decide on a system out of all of this that suits you. And my challenge to you, folks, is to resolve to follow that system for a batch of trades without changing the rules. And ladies and gentlemen, that is a rite of passage. Otherwise, you're going to be coming on courses for the rest of your days. You're going to be buying books for the rest of your days. You're going to be having a double Johnny Walker at night, and you're going to see some bloke who sells you the long-lost secrets of W.D. Gann easy. So you've got a bit of work to do, folks. It's an exercise that I do myself at least 2 or 3 times a year, because the discipline slips. If you want to do this, folks, quite honestly, you can start to do it in a demo account if you want, or start to do it with a real account, but just trade very low in size. Trade it at £1 a point until you get the hang of it. And just write it off as a training exercise. Now, something very special happens when you do this. Somewhere between 10 and 15 trades, all the internal resistance goes away. I've seen this so many times with myself and with dozens of people that I've done this with. So that's your task out of this. Quite honestly, all of the technical analysis is largely irrelevant compared to this. So to be able to surrender to the markets is quite something. And as soon as you've got an expectation in anything and that expectation doesn't work out, you actually get a dose of pain from the universe. And it sits there like about 3 pints of Guinness at lunchtime. Causes an awful lot of pain. That pain grows and grows and grows and makes trading quite difficult indeed. So one of the ground rules of this is to try and get yourself to a point where you've got no judgment, no resistance, no negativity. And as Mark Douglas says in his book, get yourself to a point where you have 2 levels of belief. At the level of one trade, anything can happen. Anything. It only takes one idiot somewhere in the world to totally stuff your position. So, and this is the one thing that helped my trading when I first read Trading, The Disciplined Trader, was that traders need 2 levels of belief, folks. At the level of one trade, you have to firmly believe that anything can happen. But at the level of 30 trades, you have to firmly believe with every core of your being that your edge will work out. And that's difficult. All of us understand thinking and probabilities at an intellectual level. We were all taught stats at school. But to understand probabilities at a stomach level is quite something. And here's my metaphor for this, folks. And this is something I would like you to think about. I think that in trading, we're walking along in a dark night, surrounded by a thick fog. We have no idea what's going to happen next. None. Not in this environment. Not in any environment. You've got a torch. And that torch illuminates a narrow path in front of you. The fog is your life and the ups and downs of the market. The torch beam is your conscious presence. And the focused, clear place ahead is the present moment. That's my metaphor for what I've just been talking about. And if you find your trading unsatisfactory, it's only by surrender where you can take positive action to change. And you certainly won't work out what's going to happen next. Let's go back to the Guinness. Let's say that you have an expectation that this trade's going to work out, and it doesn't work out. The Guinness arrives. It sits in your stomach here. Creates a great deal of pain. That happens again. More pain arrives. You've now got your setup comes again, and your job is to execute that setup without fear or hesitation. But our minds have got two characteristics. They associate one moment with a previous moment, and they want to avoid pain. The setup comes again, sir, and at a level that you knew nothing about, your mind sees the last two, and it says, this caused me pain. And at a level you know nothing about, you'll subtly hesitate. And the way to get over that is to stop the pain. And the only way to stop the pain is to believe with every fiber of your body that at the level of one trade, anything can happen. So if you have pain, it's because you haven't fully accepted that fact. And Mark Douglas's exercise of 30 trades will do its best to get rid of that pain for you.
In other words, you're going to have to take your methodology and determine a given set of rigid variables, because what we're going to do is set up a trading exercise with just a simple 25 trade or 20 trade sample size. In other words, what you're going to say is that I am willing to invest in the development of these skills, the skill of learning to trade without fear, learning to think in probabilities, because when you learn to think in probabilities, the fear will go away. But if we set this exercise up so that there's no wiggle room, there is no wiggle room. What I mean by wiggle room is that the variables, the criteria that you use are absolutely rigid, black and white. They're either present or they are not. That's the only decision you have to make. In other words, if you do it in terms of lights, whatever lights you're going to use, whatever time frame, the lights you're going to use in whatever time frame, they are either on or they're not. And if they're on, you are obligated to take the trade. And what you're going to say to yourself is that in this, whatever criteria or plan that you set up is, I am not going to take just the next trade. I am going to take the next 20 trades. You are committing yourself to taking the next 20 trades of the occurrence of your edge. There is no subjective decision-making whatsoever. Am I really clear about this? There is no subjective decision-making whatsoever. Now that means that you have to be prepared based on the amount that you have to risk. You have to be prepared to take 20 losses in a row. The likelihood of that happening is about as remote as getting 20 wins in a row. But the point is that the dollar value of the risk of each trade multiplied by 20, you have to be able to afford. So you've got to set it up that way. You've got to set it up so that you can afford the dollar value of the risk of taking 20 losing trades in a row.
Yeah. It's time. So yeah, this is where I'll be doing my exercise, my 30 trade exercise. So yeah, long story short is we're turning over a new leaf and we're starting a new page, and this will be our area. So here I am logged in, and it's through, they'd use Tradovate. So that's where I'll be trading out of, and you're supposed to use their sim trading platform. Live market commentary, kind of like a squawk box. Let's play that and see if anything comes
Player
through.
refreshed.
Okay. Add modules. Oh, here we go. Okay, so this is our chart. Let me shrink myself down a little bit more. And I'm not really blocking anything, so let's just take a sample trade here. This will not count, so I'm going to sell one market, cancel. I need to set up stop losses. So let's do name, new. Let's do 2SL for target. And this will be shown in ticks, take profit. So 4 times 4 is 16. 2 times 4 is 8. Stop loss is a stop. I'm not even going to call an auto break even. Okay. Sell market.
Order filled.
Are you kidding me? Is that for real? Where's my lines? All right. We're getting close here. See if our target profit gets whacked.
Order filled.
Apparently it did. Okay, so first trade in the book was successful, and it just closed out. Just going to make sure everything is closed, and it is. And yep, it canceled the stop loss. That looks great. Middle price. Okay, that's our trade showing there. So that looks like we got a first, second entry long, which I
Order
think
filled.
we buy that. We buy it right when it happens instead of waiting for confirmation. Okay. Fills and orders. Show order lines. Yes. We're very close. We just would need to bust through the EMA, and it's just touching it. But we are here to wait. I need a timer. Oh, it's up here. 27 seconds left on this candle, and we're looking for it to finish near the top, aka by the candle. Especially towards the end, we want to see it running. And we wait and see. Sit on our hands and let her
Heads
go.
up, we're 10 minutes away now to the bottom of the hour, where Fed President John Williams is said to be speaking of New York, moderating the discussion with Columbia University at the 2023
Here we
Environmental
go. We're
Economics
gonna
and Policy
tick
Conference.
it.
So
Order
this is
filled.
Fed's Williams here speaking on
Order
measuring and
filled.
adapting to.
Yeah. So that was 2 decent trades here on the day for $40. The first one was a test. The next one was 1, 2, second entry long. I know, although you could argue that that was off of the low. Well, I think that's okay then, because we weren't above here, that's for sure. So we could be looking for a second entry short, although maybe on a different time frame. This is a reversal. So we watch it and wait for our proper setup. So on that note, how do I log out of here? Okay, I can log out of the deal. Being evaluated. Profit target. Interesting. So there you have it. A couple of trades where we just follow the rules and we sit on our hands and do nothing when the trade is active. So thanks for following along, and I look forward to going on this journey with you. And please like and subscribe, and yeah, any comments are appreciated. So on that note, Random Dave is out of here.